Afternoon. How are you all doing? God, I look very yellow today, don't I? Oh, hang on. Weird. Don't know what's happened with my light. Better. It was a bit yellow there. How are we all doing? Well, good mornings. Been a very interesting session, isn't it? Not. So, yeah. You can see by the euro US dollar that the market's been on fire today. Absolutely on fire. Newsfest. Afternoon, Steve, Ian, Jerry, Peter. How we doing? Baggy, Virginia, Johnny, Michael, Brian. Morning, afternoon. Burke, Sean. How we doing? So, yeah, not a lot happening. So I banked 0.6 today, but that's what I banked this morning. So if you're in the live room this morning, if you weren't in the live room this morning, I suppose you don't know. But banked pound US dollar. No, I haven't. Pound US dollar. Oh, yeah, sorry, yeah. No, that was the one I got out of. That was an accidental entry. Get that. Pound Swiss. So got out of pound Swiss today. From there. Out there. Just because I've got a fair old bit of Swiss on. So pound odd out that today, which is there, straight in, straight out. That's a H1 M5 mean reversion from yesterday, straight in, straight out. Lovely, easy little trade, straight up into resistance. Went further. And Euro CAD, that was yesterday. That's it. So just a bit of pound today. Pound odd, pound Swiss. That's it. ORB today banked, as you can see, flat today, basically, on the ORBs. Look at this. I've just put the trade manager dash up just to show you what's happened this week, just to show you how good this week has been with the opening range breakouts. These are the weeks, yeah, when you see your P&L in your back tests going like that. Yeah. These are these weeks where the market livens up, wakes up, and just goes for it every session. This is where you make your money. 19% increase this week, just this week. Last 4 days, this is. We haven't finished today yet. Obviously, you're going to get weeks where it's choppy. You're going to get losing weeks. But these are the weeks where you make your money. And I closed a lot of these early as well, didn't I, this week? So opening range breakouts on fire. So the DAX today got hedged at the open. The shorts stopped out there. And then we literally went sideways all day. Didn't quite get to my stop loss on the longs. And the longs closed out at end of session there. So basically break even today. So reset basically for the US. So we'll see how we do with the US today. What's time? 24. ADRs, there's nothing much has moved today. So I've got an opportunity to bank a load, but I've got a good 2% I can bank there. Nothing's really moved, so I don't really want to bank anything because nothing's going anywhere at the minute. But ADRs today, there's been quite a few of those, so we'll go through those in a minute. Afternoon, Nuncare. Mick, Harry, John, hello. David, hello. Happy Friday. I'm the man, apparently. So, just looking at something's going on over here. Yeah, ADRs, we've got quite a few to look at. 3 minutes. What we'll probably do is just watch the open first, and then we'll come back and look at the ADRs. But most of these ADRs are yen related because we've had that news on the yen. So let's recap the news quickly. So there's no news this afternoon. We've had the retail sales for the Canadian dollar come out, which were negative, but it's ever such a slight miss, and retail doesn't really do an awful lot. So as you can see, not a lot there. There's a bit of positive on the pound this morning, but that's it. So the news is done for the week. This morning, we've had a lot of yen activity. So retail sales for the UK, we had obviously market didn't do an awful lot off the back of that. Then we had the Bank of Japan come out and say we see little need to act on yield control for now. The yen collapsed, and obviously everything shot up against the yen by 100 ADR, 150 ADR plus. And then Kanda came out and said excessive FX moves are undesirable. So just again, reiterating, if you keep selling our currency, we will buy it and it will power up. Yeah, so just a little shot across the bows to remind everybody that they're not happy with the situation with the yen at the moment. So on that, we got a little spike down and then the yen's kind of started to retrace a little bit. So that's the only thing really we've had news-wise today. Lots of news coming out on Russia because Russia had its interest rate announcement today. They've gone up to 8.5%, but it doesn't affect us because we don't trade the ruble. So that's all we've had really for this morning. So not a lot. Looking at the indices at the moment, we've had a little bit of movement today. We've had a little bit of buying in the NASDAQ. We've had a little bit of buying in the S&P. The Dow had a big drop and then it pulled all the way back up again. So the Dow's a little bit up. The NASDAQ's a little bit up. And so is the S&P. Don't quite know why I haven't got the period separators turned on those. See where the days are. So as you can see, Globex session is up across the board, but not dramatic, and it's coming down pretty hard pre-market. Look, so ADR, we're not too far from ADR on the S&P or the NASDAQ. The Dow, we are quite a long way away from ADR, so there's lots of movement room basically. So upside and downside targets, really same as usual. We'll be looking at the previous day's highs and lows. So up there and all the way down there. So there's a lot more downside on the Dow. We're 3 days up now, or really, 3 days up after the big push. So potentially this could be the sell-off today. There we go. So we are short. Well, there's a gap down as well. So it's initial. If you take the 15-minute or the 5-minute pre-market, it's that range there or that range there, you will have immediately flipped in short. A bit too close to the edge, really, to take that. So obviously the market's been selling off quite hard in that 5 minutes before the open. So always a little tricky taking those ones because you're going to get slipped on them. So I would wait for the 5-minute ranges to kick in. If we're going to get a decent rally today off the back of the earnings reports, then we're going to get the rally anyway. So you don't need to take the pre-market because it will go off the 5 anyway. So safer entries off the 5, really. Wait and see what happens. Afternoon, Gustavo from Colombia. I miscalculated my position on the Aussie dollar Swiss and the Aussie dollar US dollar. Huge drawdown. That's not good, Harry. Aussie dollar Swiss and Aussie dollar US. Yeah, bit of a drop on the Aussie today. Actually, the Aussie has moved today, hasn't it? So a big break to the downside on the pre-market on the Dow. Short NAS, 5-minute pre. So your pre-market on the NASDAQ is there, and you're there. There's your pre-market ranges. Sold off quite hard there, didn't it, before the open? So might be a big down day today. We've had multiple big up days, so it's due a profit take move. It is Friday as well, so they might unravel half of this move this week. So we'll see. We've got 2.5 minutes left on the opens. Pulling back in up inside the range on the Dow. All pulling back up inside the range at the moment. The Dow is a lot stronger though. So just looking quickly at earnings. So today's reaction is off the back of Intuitive, Surgical, Amex and SLB. Okay, so ISRG is NASDAQ, and that's Dow Jones. SLB, I don't think it's listed, is it? Not in an index. So Intuitive Surgical and American Express, we've got the NASDAQ and the Dow, basically. So there's not really going to be a massive impact, I don't think, off of those two. So we'll see where we go. At the moment, doesn't look like it wants to go anywhere. So less than a minute to go on this 5-minute candle close. Then a break of this 5-minute candle close may well start the day off, but there's not a huge amount of volume in there, is there, at the moment, especially on the Dow. NASDAQ's going long out the top. Hope you flip long, Brian. Afternoon, Astro. Okay, so there's your 5-minute ranges in. NASDAQ's 5-minute range is too big for this version of the EA, so it's just basically giving this one a skip today because it's too wide. So optimal range for the NASDAQ NASDAQ, where are you? 619. The opening range is 62 points, roughly, which is well over a quarter of an ADR. So it's done a quarter of its average daily range in 5 minutes there. So not optimal for taking an opening range break based on the data I've gathered, but the other two are okay. So it's shorted the Dow so far. However, you know, nothing to say it's not going to break. It'll do what it'll do. Did you manually place the vertical dash line on the candle open? No, that's the EA doing that. Broken even and flip long. That'll do. Anybody shorted the yen pairs? Yeah, I've got some shorts on the yens. We'll come back to those in a minute. So yeah, we'll come back to those in a minute because they're not doing a lot. The Dow's just tagged me straight in and flown straight off. Look at that. Just gathered me in. So came down. The offset is there basically to try and stop that exact behavior. A immediate double bottom off the opening range and flip. So I need to spread that out a little bit further, actually. That needs to be bigger, doesn't it, on the Dow? I reckon that needs to be set to something like 40 or 50. Okay, 40. Okay, so flip long, hedged on the Dow. Hopefully it's not going to be one of those days today. Look at the NASDAQ. Hopefully it's not going to be one of these days today. Might be. We'll have a look at the FX side of things. So with the yens, obviously there's a lot of ADRs today on the yens. So we'll start at the top. Aussie dollar Swiss is obviously not a yen. XRupdate.news, morning all, blew it. Slept through Asia, Frankfurt. Missed it. The wave again. Wasn't much of a wave today. So yeah, Aussie dollar Swiss ADR hit. That's just hit ADR recently, as you can see in the last hour, and it's bouncing off. So I got out of my longs on this one yesterday. It pushed up a little bit further, then we pulled back into propulsion. This is where we would expect them to add into this if they're going to do that. So drop down M5. Your reversal alert is literally in 1 minute going to trigger. So as soon as this candle closes, the reversal alert is going to trigger. Potentially there's your run back up. Watch that level on the way back. So that's about to trigger now. Aussie dollar yen. That has already played out. You've missed it. So went straight up into ADR, accumulated there for 3 hours and pulled back down again. So there's your reversal alert. There's your retest. And you're out. So that one, you're already out. So you're looking for somewhere between a third to a half an ADR as a profit take on an ADR reversal. 51 is half an ADR. You got 53. So that one's already done. CAD yen. I'm in that one short from there. Yeah, so that was your reversal alert. We got the M pattern reversal there. And then it basically put a new high in and then it dropped down again. So your second alert would have been on that candle, which is exactly the same entry as the previous one. So you got in at the same level, regardless of which one you'd have taken on that. We've come into propulsion, sitting out of that now. So you've had 67 pips off of that. 54 is half an ADR. I'm just going to close that, to be honest. These yens, I'm really not sure about them. So, you know, I've only got really small risk on this. But I'm just going to close that one out as a scalp. I don't like the speed that this went today. As soon as that news came out on the yield curve, the market reacted like that. Yeah, and they've done this many times before, as we know, with the yen. Yeah, when they don't like the yen, they really don't like the yen. So being stuck short on it after a massive reaction like that is a bit worrying, even though the Japanese have come out and said, oi, stop it, otherwise we'll intervene, which they've always saying. They won't do it until the US dollar gets back up to a level where it becomes ineffective for them to trade. And that's going to be above 145 on the US. Yeah, up here, which is where we had the previous interventions. So there's a long way to go on that yet. So I just don't like these yens. Any of them, really. Swiss yen. There you go. So you're up at 175 ADR and holding. So there's your reversal alert on that one. You've only managed to get roughly 39 pips out of it. That's a quarter of an ADR. 70 is going to be only there. Less than half of that move is half an ADR. You know, this is 175 ADR hit to the upside. Look at this move. Parabolic. There was one down candle in that. A little bit like the Dow move the other day. Didn't stop. So big strong move to the upside. Don't like the way that's holding. More of a flag. Euro yen, same thing. Yeah, in that one. Just don't like it. I don't like going short on these yens. It might be completely the wrong thing to do, but this is a double top. This could be the absolute perfect spot. If this breaks this high, though, it's not going to stop, is it? So look at how hard it was to get out of these yens last time, and look at how parabolic this move was before we got that tiny little flag break. Then we got a pullback on that move, and we broke up to the upside. So yeah, I just don't trust it. I don't mind having some exposure on, but I don't want too much on it. There's two on, which is the Euro yen and the US yen. I mean, there's no profit, but it's a lovely double top though, isn't it? It's exactly where they wouldn't let it go through last time. So what I'm going to do with this one, I'll let the market decide whether I should have it or not. Break even, no risk. Either goes or it doesn't. Euro yen. The other yens are the pound yen. That's already played out. You missed it. 150 ADR straight up. 150 ADR. There's your reversal alert and retest. End pattern. Bang. Down. Out. And US dollar yen is the other one. So there you go. So there's the entry on the US dollar yen there. So what I might do is keep the US dollar yen just to run some yen. If they are going to intervene, that's the level they're going to look at getting real. That's where they'll get really arsey, and we'll start hearing about them every single day. They'll be saying, if you don't stop devaluing us, we are going to pump it, and they will pump it, and it'll go 400 ADR. So I don't really mind having US yen on, because this is the measure for the yen. We've had a big, strong move up on this US. It's a 50% retracement, so it could well be that is what we're going to do. Yeah, but I just don't. There's certain currencies, Swiss franc being one of them as well. When it goes, it goes. And when it goes, it doesn't stop. The yen is the other one. The safe haven currencies, where they pump money in, they pump money out all the time, are the ones you tend to get the worst squeezes on. So you just don't want to get over leveraged on this. If they are going to weaken the yen and drop it, it's going to be a while before you start getting, so it's going to be like 2 or 3 ADR, so possibly 3 or 4 days before they'll start actually getting serious about intervention. The end, so we'll see. So there's US dollar yen. The other ADRs we've had today are the Swiss franc. Swiss franc basically was undoing its positions. So we had all that massive strength coming into the Swiss franc. And then we've had the profit take moves on it. So it's been push, profit take, push, profit take. We're on the next leg down. Potentially, we may well double bottom and pop up from there. So I've got one on that at the moment. That's extended down to ADR again. So you could take another one on that one today. In fact, I will be. It's 35. No, I won't. That's not quite far enough. So that needs to push down a little bit further, really, for me to get another position on. But there is an ADR reversal there. That's off of previous day's low. There. Yeah, you can't see that, but that's previous day's low. That's New Zealand dollar Swiss. The pound Swiss, again, I'm out of the longs on the pound Swiss. Really don't like the pound long at the moment. It may hold up. And I put a message in the Telegram group earlier about the pound. It's very hard to trigger, to decide which way the pound is going to trigger from here, basically, because we've got a massive problem with inflation still. So if you look at the fundamentals for the pound, we are sitting at 5 on the interest rates. We were forecast to go up to 5.5 on the next rate increase. The certain market participants have been saying that's now going to be 5.25, not 5.5. It's been reported in the media in the UK as well. However, that is still too high, way, way too high. So although, yes, it's come down by a massive amount, and it came down by way more than we were expecting this week, which is fantastic news for the pound. Where it was there. We got 7.9. We were forecasting 8.2, so we made a 0.3 increase, which is much better than we expected. So obviously the pound has dropped off of that. But New Zealand dollar Swiss 125 of its weekly. We are still sitting at 7.9. Yeah, the inflation figure is still way, way, way too high. So it is still bullish, the pound. We have still got at least half 125 New Zealand US on the weeklies. We still have got at least 0.75 of an interest rate rise to come. So 5.75 is still going to be terminal rate at the moment. So this is still bullish. The pound is still very, very bullish. Yes, we've had a drop. off of the interest rates. Yeah. Which is expected. We should be having a drop when the inflation, off the inflation figure. When the inflation comes down, we should be getting a drop. But it's probably going to be a bit of a dead cat bounce because this pound should still be strong moving forward. So you look at the grand scheme of things. This is the wrong one to look at. But all the other pound pairs, yeah, we are massively bullish, and we will remain massively bullish. Because the pound is increasing its interest rates still. So these are just pullbacks, I think, on a continuation long. But we've had absolutely nothing from Bailey. Since the inflation figure came down, Bailey hasn't said a word about what they're doing with interest rates. So I think they're thumbing over the options at the moment. And we are expecting an interest rate rise to come. And our next one is August, which is the week after next. There. So that's our one on the 3rd of August. So this is where we're going to find out. We will find out hopefully before then what the forecast is going to be for the pound. But I still think this is bullish. However, that is a big drop. So all of these pounds, when they're getting extended to the downside and there's long opportunities, I'm just, as you can see, I'm being very cautious and getting out fairly quick with not a lot of profit, but enough profit to make it worthwhile. Just in case Bailey comes out and says, in light of what we've seen with the inflation figures, we don't want to overshoot, therefore we're going to pull back on interest rates. If that happens, the pound is going to come down. So there's just not enough news at the moment to decide whether or not it's a bull or a bear. So for the minute, I'm in it. I'm in pounds, but I'm cautious. A little bit like these yens. I'd much rather get something into profit, put it at break even and be wrong and not go into drawdown on it, because some of these things could squeeze quite hard, I think, at the moment. So so that's pound Swiss. We've got the pound New Zealand, the euro New Zealand as an ADR hit to the upside. So that's 100 ADR. That's a beautiful resistance look. So we've got resistance there, which is the previous day's high. We've got the monthly high we're coming up to as well. We're stuck in a range. This is potentially range high double top. Potentially. Obviously, I have no idea, but that could well be where we're going to turn. So that's ADR today, straight into that previous day's high. So if you drop down to M5 and wait for the reversal alert on that one off of this level here. Yeah, you're going to get your reversal alert there and got a nice pullback down into previous day's high as potential support. But obviously it could go all the way down into those lows. So lots and lots of room to the downside on that. Again, I don't like the way this is holding. Potentially it's accumulation and just off we go. So we'll see. So that's Euro New Zealand. We've got the Swiss yen, CAD yen, Aussie yen, and Aussie Swiss. We've covered all of those. So we've covered everything there basically. Euro yen and Swiss yen are the two that are the most extended or have got the most extended today, and those are the ones that are playing out at the moment. So, well, Swiss yen isn't actually. This is looking more like a flag, isn't it? We'll see. So there's your ADRs covered. Let's have a look at what the indices are doing. Fantastic. So double-ended stop out for me on the Dow. So that short stopped out, flipped long, stopped out, gone short, missed it. Not going to be a good day today. So my only hope for survival is the S&P having a nice big rally today to the downside, which it looks like everything is doing. Everything's rolling over and everything's going short. So everything looks like a short today. So let's have a quick look at those first before we have a look at the other stuff. Oil as well, by the way. Oh, it's happened. I was just going to say, I was watching this morning, and I was going to say, watch for a bounce there. It's already happened. Missed it. When did that happen? It wasn't like that before I came on. 2 o'clock. Yeah, just literally, just as I went down to make my coffee, I was watching this and I was like, I'm going to talk about this in the live room because this looks like a possible drop. So, yeah, there's your double top basically on previous day's high. we are kind of forming a range now up here. So previous resistance has turned into support. So we've got a range high there, which took 5 days to form. We've put in a new lower high, and now we've put in a double top. So potentially this might go into some kind of accumulation before we break for the next leg up. So that's a potentially good little short all the way back down to there. Again, I would only trade oil with a stop loss. So the reversal that's just happened on it, stop above that high realistically would be better in case it comes up and tries to double top that before it drops. So you're looking for somewhere around about a 2 to 3 hour drop if we're going to stay within that range. So it's a fairly nice risk reward opportunity to the downside, but it's already played out really. So you could, if you want to get into it, just jump in, but you've got to get in down there now with a stop above there. It's still a 2.5 hour, sure. But yeah, anyway. So let's look at the indices. Dow, downside potential targets today are yesterday's low and previous day's low. So that's the rally from Tuesday. Went into an accumulation, and then we pushed again, accumulated, pushed again, accumulated, reverse. So looking for a pullback play. If it's going to do a new leg up, we're looking for that pullback before the next rally. So downside target, you've got potentially 174 points to 270 points, which is 330 ADR. So basically ADR is there. So yesterday's low is within ADR, so easily achievable. Previous day's low is outside of ADR, so it's going to be trickier to get down to that level. But this move here is our first really strong push. We were on that, got all of that. Really strong push. So if we are going to hold to go long, I wouldn't expect it to get much below that level, and then the buyers will start to add back in and buy the stocks back up again and pump it. So we'll see what happens. Your S&P downside target is within ADR as well, which is yesterday's low. That's that previous resistance. First support, we're looking for a second test to that level. Propulsion gap, yeah. So this is what happens in the market. They accumulate, they buy, big orders go in. Everybody that's long from that position will want that to stay long. So they add to their positions, drive the market back out again. If it comes back down and has another go, they will attempt to drive it back again. It'll depend how many sellers are in the market at that point, but it's holding. So we'll be looking for a bounce out of that. So should be able to get a flush down to there if there's enough selling momentum today. And then the NASDAQ is dropped. Obviously, we had a big drop on the NAS yesterday. So downside target on that would be yesterday's low. Failing that, you're coming all the way back down into this propulsion gap here, which is 150 ADR. So the NAS has got a lot further to drop today. I don't think there's been bad earnings. Maybe it was bad earnings. Intuitive Surgical. Down 0.5% on the day. Not that big, is it? Not that big a drop. But yeah, it's coming down. So difficult to tell really, isn't it, with that, what that's going to do, that NASDAQ. But market wasn't very happy with the Tesla result either. So that's why we got the big drop. So potentially that could continue down. So all looks short today, doesn't it? But we'll wait and see. All looked long, then it all looked short on the DAX, didn't it? And then it carried on going, I think I'm long and short all day. So we could just go into rotation on all of these today. And if that's the case, it's just one of those days where you just have to give some back. But there you go. Brian, 1R on EU, half off. You're still trading that EU, even though you've proved to yourself, and I've proved to you with the EA, that it's not a sustainable strategy. You're still doing it. As long as you make money with it at some point. Fail. Just choppy in it today, but hard. These are the days. Same as the opening range breakout EA, basically, isn't it? Henna's gold. Today. What's the US dollar going to do next? No. We've got no more news this week. The US dollar is going to be very quiet until next Wednesday. I think we may well get a big day off of it and then a big retracement. We've got the PMI figures on Monday, but no one's going to, in their right mind, is going to dump a load of money in or out of the US dollar until FOMC on Wednesday. So till we get a confirmation of that rate, I don't think you're going to find a lot of movement in gold or anything. So look for range bound opportunities on it. If it drops back down, look for a bounce out of that. If it pushes up, look for a bounce down off that. I wouldn't get into anything else than a range bound play at the moment, just because we're waiting for the US dollar rates. XR update.news. I'm short on yen, waiting, praying for them to come back down. Yeah, all these yens pushing up a little bit at the moment. New Zealand dollar yen's pushing back down again. Pound yen's a bit whippy. Euro yen's still doing all right. This yen flaggy still. Aussie yen come down. So not convinced by these yens, really not. So hard. When you look at the moves we've had on these yens, it's just really hard. When you've been, this is one of the problems with position trading psychologically. Position trading takes away the vast majority of the barriers that everybody finds hard in trading. So trying to catch the tops and the bottoms, getting stopped out constantly, system hopping, it fixes 90% of your problems. When you've been through a squeeze like this on an instrument, it knocks your confidence in the instrument. And people have said it in Telegram, people have said it in here. I'm not trading that again. So just one squeeze, yeah? Go and look at your P&L. Aussie dollar, New Zealand dollar. I didn't say I'm never trading that again. It kicked me to bits. I'm still going to trade the Aussie dollar, New Zealand dollar. In fact, I've taken 2 trades on this since it kicked me to bits. You can't get kicked to bits and go, right, that's it. That's off my list. Because at some point, virtually every instrument or every currency is going to hurt you in some way, shape or form. And if you knock them all off the list, you're just going to have to give up trading at some point after 28 things have knocked you back, haven't they? So you can't do it. So, but the yens at the moment, I think it just is so fragile, the yen, and they haven't got any ammunition to drive this thing apart from buying a crap load of it, and they will do it. But until then, this thing could just go parabolic again. So it went parabolic when they bought it. Yeah, this is when the profit take move started on this. We had the yen powering up. The Japanese started buying the yen. At the same time, we had US dollar crap, and it all went mental. So you've just got to be careful you don't overexpose yourself on it. Nothing wrong with trading it, but just keep your exposure a little bit lighter on it. Yeah, could go either way, couldn't it? I suspect at the moment, after what the Japanese said today, the market will be like, oh, okay, back off again. Because they don't want to get caught the wrong side of it. It hurts. They've been caught the wrong side of it many times, even though they've been warned. I think next month I'm going to switch up to the FX ORB to AU. This week would have been beautiful, except for Tuesday. Brian, use the opening range breakout EA, backtest the Aussie dollar, US dollar for the last 2 years and see if it works. If it doesn't work, don't do it. Some instruments are much better at different strategies because every instrument is unique in its movement. It flows differently because it's got a different relationship. Yeah, so commodity pairs against finance pairs will all have a similar relationship. Commodity against commodity will have a similar relationship. Aussie dollar CAD has a totally different relationship to Aussie dollar US dollar. So some instruments will have a much better possibility of making a strategy work. some get manipulated more during the Asian session than others. Obviously, the Australasian pairs, the Aussie, the New Zealand, the yen, they get manipulated more during Asia. So if crossing an Asian pair, what you're doing is you're trying to pick the Euro and US, which are traded in London and New York, and you're trying to get a breakout in Asia. It doesn't do that. It doesn't move very much. So that's when you should be taking a London breakout strategy, because London is when they start the movement on those pairs. If you trade the Aussie range or the Asian range with an Aussie or a New Zealand or a yen pair, you might find the range is bigger, and therefore the movement after that range is more stable. Rather than bigger, more stable. What you're looking for is strike rate. With breakout strategies, strike rate is more important than distance. Any breakout strategy, you should be looking for a decent move, but in relation to the range that's been formed. So a couple of R is enough to make money. But you want to get the strike rate up. So best thing to do is just backtest a load of pairs. If you're trading the hourly time frame, backtesting an hour's worth with the ORBEA probably isn't going to take you more than an hour or two, because the hourly time frame backtests 12 times, 24 times, maths, 12 times faster than the 5 minute. So test it. Up 19R for the month. That because I manually intervened. Yeah. Only 5R if I didn't. Yeah. But I've backtested it and I got some great results. Then I backtested it over a longer period of time. Virtually blew the account. Because a month isn't enough to test anything. 6 months isn't enough to test anything. A year is about what you want as a very bare minimum. But then again, you want to do that over a different ATR period as well, because the ATRs will change totally. So your Asian ATRs will be different when you get to, or ADRs will be different when you get to a different point in time as well. If you're in a bull market for Asia, because China is importing tons of stuff from Australia, the Aussie dollar will rally for an entire year and be nice and volatile. If China then reduce their imports from Australia, the ATR will drop and it will go into a range. Those 2 periods of time, you're going to get totally different results with exactly the same strategy. Got to backtest over different periods to make sure it's robust. Or if it's not robust over a certain market regime, you need some way of filtering that regime out so that it doesn't trigger trades on that pair during that time, which becomes infinitely more complex, but that's what you have to do. New Zealand dollar CAD got more changes. That Aussie dollar, New Zealand dollar. What? New Zealand dollar CAD. So I got long on that one. That's an H1M5. Sorry, got 2 longs on that one. No. One there. One there. I need to adjust those TPs down. Enough? That'll do. Somewhere around there. ADR. Yeah, so New Zealand dollar CAD. Yeah, so looking for longs on that. It's a nice double bottom, potentially a nice support bounce, not double bottom. That would have been a double bottom. This is a nice potential resistance support bounce back up. Obviously higher, but no idea whether this is going to go long or short. So this is a beautiful pullback on a long play, or as we've put in a new lower low, this is potentially push back down to come test this area. Either way, looking for that move there. Got more changes than Aussie New Zealand. That's just going sideways at the moment. Short on that. Just going to just target down. Actually. Just switched on. So I don't know if you've seen it, but just saw the consistency rule in Top Step is now 50%. I know. That's great news. Could change that. Yeah, so basically Top Step now, if you're trading futures, you've got a 50% consistency rule, which means you can hit target in 2 days rather than 4. But it is actually helpful, because I've closed out trades when I've got to $1.5 grand in profit, because I know I can't go further than that with the consistency rule, and they have gone further. So it will actually, I think, benefit if you get a good run on and you can get a position on and it starts going and you suddenly get to $1.5 grand in profit. At the moment, you've got to shut it out, because if it goes over that level, that day gets discounted from your results. So increasing that is good. It's a good thing. Top Step are really making some rule changes that are shaking up the futures market at the moment. They're getting better and better. They're listening more. They got to a point where everyone hated them because they kept changing the rules so much, and all the rules were kind of negative towards payments. Now they're changing the rules, which are actually nothing to do with payments. They're the same, but they're making everything much more flexible and easy to trade, which is good. So they may well come back to be my favorite futures company, but we'll see. We'll see if I pass this evaluation I'm on at the moment. Then I'll like them. ORB Asian range on GC is not bad. Made some good last 10 days. Pound CAD. Again, this is pretty much the same as trading the pound US dollar, but price action is virtually the same as pound US dollar. So if the euro US dollar doesn't work, the pound US dollar or the pound CAD will probably not be dissimilar. The only reason it will have worked very nicely in the last week is because the pound has been massively on the march. So got to backtest, just backtest. It's got to be a long-term edge. Short-term movements do not make you rich. Long-term edges will make you rich. So you just got to backtest. If you can find an edge, if you backtested over a period of a year on all 28 currencies, and you found more than 50% of the currencies had a positive edge, yeah, and the others had a break-even small loss, and then you backtested the same thing at another out-of-sample period, and you found similar results, but the pairs didn't have to be the same ones. They could be different pairs, but roughly 50% or more of them were profitable. There's an edge there, isn't there? You don't know what's going to move and what day what is going to move, which one it's going to be. So if you need to diversify the portfolio, if you try and focus just on one currency pair, and that euro US dollar, for example, just talking about this breakout range on the euro US dollar, if the euro US dollar does that for 4 or 5 days and chops you to death, and the Aussie dollar CAD does that for 4 or 5 days and would have made you 4 to 5R per day, this pays for that. So you've got to diversify your portfolio so that you're covering all currencies crosses, because the market works single currencies at a time. Look at the Swiss franc. Yeah. The Swiss franc massively dropping over a period of 2 weeks there. Massively dropping. Massively dropping. Massively dropping. This is the Swiss franc being worked. They're working the Swissy. Yeah. They will stop working the Swissy, and then they will switch over and start working the US dollar. Then they will switch over and start working the pound. Why? Because we get news events that mean they need to readjust their portfolios to drive money into another currency because that one has become more favorable. So if you're not covering all currency crosses, you're going to miss the opportunity that moves. If you're just trading 3 pairs and there's no news events that move those 3 pairs for 3 weeks, you won't get anything but death. All the other stuff that will have flown 20R, you'll have missed it. So you've got to diversify. You've got to backtest and have more than one currency in your portfolio. This is why people that trade just a single currency pair tend to not do very well long term, because you might have a fantastic system that works on the pound yen, but when the pound yen doesn't move for 3 days, what do? Probably get killed, or you don't get a setup and you don't take a trade, or it just you can't make money. So you've got to have a portfolio and a diversification, otherwise hard to make consistent profit. Which is why I have the exposure rule. So you can't overexpose yourself, but equally you have to be exposed enough so that when something goes parabolic 200% of its ADR, you've got a chance of getting onto it. Or if you're the wrong way on it, you've got a chance of scaling into a position that will get you profit on the pullback. But either way, you make money as a trader on volatility. Whether it's going your way or against you doesn't matter. If it's moving, you can make money. If it's not moving, you can't. Yeah, I've been in this trade from here. Yeah, the wrong way. No problem. Scaling into it, that's fine. I don't mind that. But for the last week, I've just been watching nothing happen. I can't make money. I can't lose money. I can't do anything because it's not moving. Other stuff has been moving, and I've banked 8% on the other stuff. This stuff's just sitting there. You've got to have that diversification. Otherwise, you'll just be sitting there not making anything. Or, as you know, getting killed. Or making an absolute fortune. Euro US dollar, we've looked at some of those days over the last week. It's been absolutely killing it. Huge returns. But just think if you'd have been trading 2 other pairs, which had also been doing that. It's like, you just got to test it. Test. The backtest I ran was over a year on 5 different pairs. They all collapsed. Yeah. Biggest problem is FIFO. Yeah, well, you will have that. In the US, unfortunately. Right. Let's have a quick look at what the indices are doing. So pulling back on the S&P, pulling back on everything. So hopefully these are just pullbacks on continuation legs short and not DAXy range bound nastiness, but it is Friday afternoon. So the S&P obviously I've got on short only at the moment. I'm not hedged on that. So if this does run nicely today, that will pay for that loss. It's going to be a break-even day by the looks of things, but that's what happens on range days. Right. Let's have a quick look at these RSIs, and then I'm kind of done because it's Friday afternoon. There's not a lot happening. CAD yen. So we've pulled back on the CAD yen. I'm out of that one. That's an RSI extension on the 4 hour. So it's an opportunity for a pullback. If this is a continuation short, this is where you want to get in. Perfect. If it's not, you want to be looking to scale into a double top and then get out on the pullback of that before they potentially do that. But it's the yen. So I'm really I haven't got any confidence in it at the moment because I just don't know what this US dollar is doing until next week. I want to know what the US dollar is up to before, and that will give us an idea of whether or not this yen is going to rally or weaken. If that US dollar is going to get bad news and start to drop, we'll get some power probably coming in the yen, which means this is going to come down again. So it's all, I hate FOMC. The run up to FOMC week is just always like not quite sure because US dollar drives everything. So it's difficult to tell. But Swiss yen also extended on the 4 hour. That's extended on the hourly as well. Not quite enough for me. Didn't quite get up there. But beautiful mean reversion opportunities on these. Yeah, A-shaped recovery, certainly on the cards as well. But at least a pullback. We've got 2 levels on this one to pull back into. Previous day's high and yesterday's high, which may well act as resistance, support, and then a bounce out. But equally, could come all the way back down again. Again, the Swiss franc on the march. Nice profit take move. Yeah, 38 retracement, next leg up. So it could go, continuing that way. Euro yen, 4 hour RSI extension. So there's a possible entry there. It's only just extended though. It is a lovely level, though. That's why I've kind of broken even on this one, because this is potentially a really nice bounce. It came straight into that level. You can see the limits triggered straight away, and potentially this could come back straight down. But again, euro, next Thursday, we've got the rate announcement. The euro will either power up or dump. Don't know which. So whenever you're thinking about getting into positions, you've kind of got to look a week ahead and just think, what's coming up? What are my potential danger points? Yeah, because we're not getting into trades and getting out on the same day. We're getting into trades and potentially holding them for a week, sometimes, ideally a couple of days like that. But you know, it's the news that moves the market, and it's the fundamentals you just got to be aware of. So euro yen, that's extended. We've got the euro US dollar extended on the 1 hour. So again, nice pullback on this. I've hedged on this now. So I've got sells on, which are in profit. I'm looking for this to pull back down into here to get out of my shorts. And then basically I've got this long on. So I'll be looking for a bounce back up to get out the long. So the ideal for me would be for this to pop down to here. I'll exit all the shorts, and then I'll take another long there, bring the average down, and wait for that pullback on this move to get out of the longs. Tick, tick. Perfect scenario. That's a perfect world, obviously. We don't live in a perfect world, so that may or may not happen. So that's your US dollar extended to the downside, obviously. So it's a long opportunity if you're not in it. Pound CAD. Again, same thing. It was extended down there on the hourly. We're extended on the 4 hourly. I've got buys on this one already. Pound again, very difficult to tell. That's a hell of a drop, that pound. We've had the US dollar powering up at the same time as well, which has driven the CAD. And obviously oil price is doing well as well. So that is a nice 61.8 retracement. So potentially second leg up. And as I say, I think this pound has potentially got another leg or two. We've got more interest rates coming, but it is probably the biggest pullback we've had and the strongest move we've had for a while. You look at the speed of that drop. You know, we had one there, but that's Liz Truss, so ignore that. So that, you know, this is probably the biggest sell-off we've had on the pound this year, off of that CPI figure, but the market was expecting it. So they've also got a hell of a lot of profit on the pound. So this is a big profit take. You know, we climb up the stairs, we fall down the elevator shaft, because as soon as everyone starts taking profit, everybody sees their P&Ls drop and everybody else starts to take profit. Everybody that sees the drop starting jumps in short that isn't in it already. That accelerates the move. That's why we get the move down twice as fast as the move up. Gravity. Gravity in the markets. Pound US dollar. Same thing, looking for a bounce. We're going to need some US dollar strength. That's extended on the 4 hour to the downside, only just though, not great. Nice divergence on that. Yeah. Price is coming down, the relative strength is going up. So at some point, price will back off and should get the pop. New Zealand dollar CAD also extended to the downside, not massively extended though. None of these are really extended, but they're all hourlies. Yeah, so I've got in all of these on the hourlies as well. Entry on that one was there, and second entry is today. I think I put the TPs on that. If not, I'm just drag that up. I think I've got that on. So TP up in that propulsion there, which is a 50% retracement of that down move. If we're going to continue short, I'll get out there. If it's going to go up, I don't care. I'll be out. US dollar yen. So again, first entry on this one. This is the one I will probably hold on the yen if the yen does continue to weaken. We've got FOMC coming up. So one of two things is going to happen. This pair specifically. FOMC comes out bad. It's coming down. Brilliant, I'm sure. FOMC comes out good. The market will either have a very positive reaction and take it back up to the point where Japan will look at it and go, stop rallying against the yen and drive it back down again, in which case then it's a scale in and scale out on that move. Or we get a positive or a neutral result on FOMC, And as we've seen many times playing out over the last sort of 3 to 6 months, every positive news event on the US dollar makes it do that or that. Every negative move on the US dollar, as you can see, makes it do that. Yeah. So even if we get positive results on the US, the market is losing confidence in the US dollar. So it may well push, but it won't be strong and it won't be hard. So this is the one I think you've probably got the most chance of not getting squeezed badly on, and the yen having a chance to push back against the US dollar. So this is kind of, I think, the safest yen short to take. So I'll hold that one. But that's extended on the hourly, nicely extended on the hourly as well, and extended on the 4 hourly just about. So there's your W pattern reversal on the long. That was the scaling initially on the hourly for me. So actually, even though there, sorry. So there you go. There's your RSIs as well. Can you give explanation of the market reversal alert CA and how to set percentage per trade? Look, yes, it's very obvious, isn't it? I don't know. Right, first question, have you been to the website and have you looked at this video, which is 2.5 hours long and teaches you about every single setting, what it does, why you use it, how to use it, why it works, the advantages and disadvantages of every single one of them. Secondly, have you read the manual, which goes into depth in extreme detail about every single setting, why it's used, how it works, visual representations of what it does. And if you have and you still don't understand it, I'm not quite sure I can explain it any clearer. But there's a lot of way. That's a bit of an open question, none care. How to set percentage per trade. There's a lot of ways of doing it. It's up to you. How I do it, I'll explain how I do it. It's not a simple EA to just, there's not a single explanation for anything with it. But so the way that I set it up is I use, as a percentage balance of risk, I use 0.25. So that is 0.25% of my account balance on each trade. And to use a percentage of your balance, you have to have a stop loss. Okay. So it has to be able to, you know, when you're saying risk 0.25% on this trade, it has to know how far away do you want me to put the stop? Because I can't calculate a percentage if you don't give me a level. So I use a half of an ADR. So my stop loss ADR multiplier, yeah, stop loss set to true, stop loss mode is set to ADR. So I'm using ADR, stop loss, half of an ADR. So I get in, it calculates a half of an ADR from my entry, and it says, right, what's 0.25% of the account if the stop loss is that far away? Places the trade, and then this setting down here removes the stop loss. Use fake stop loss to calculate lot sizing. So it places the stop, and as soon as the trade is in, it removes the stop loss. Yeah, is that what you mean? That's how I do it. There is no right or wrong on this. This is to do with your risk. So the percentage you risk on your trade should not be any, it should always be a percentage of your account. Whether it's 0.25%, 0.5%, 0.1% or whatever will depend on how many pairs you're trading, how aggressive you are, whether you're using a lot multiplier or not will come into it, because if you're risking 0.5% on half an ADR of movement, and you're using a 1.5% multiplier on it or something, or martingale or something ridiculous like that, it's going to have a completely different effect. So I found that if you're using proper exposure rules, i.e. you're not getting exposed on each currency more than twice, I found that the sweet spot for being able to survive a squeeze and not getting into more than around about maximum 10 to 15% drawdown on your account. If you are more comfortable with risk and drawdown, you can set that higher and you will still be fine, but you will be experiencing more drawdown. If you want less drawdown, reduce it. You will make less money, but it depends how long you hold on to them for, of course, and that's again another variable. But as you know, this is what I mean. There is no right or wrong at the moment on this particular account you're looking at in the live room here. This is using 0.1% risk on half an ADR. Yeah. So the reason this is using 0.1 is because it's set to trade every pair so that we can see every trade. But I've reduced the risk down basically because it wasn't given fair evaluation of trading because it was using too much risk basically, and it was taking too much loss because it was doing drawdown control too quick. So that's how I do it. But and that this is not a bad way to do it because you're, as I said earlier, if you get into every single entry that's possible with the strategy, whether it be H4 M15, H1 M5, ADR reversals, hedging, whatever set strategy you're using to position trade, if you get into every single opportunity, some will play out and some won't. So if you expose yourself long on the New Zealand dollar 3 times, yeah, one of those could play out because the other currency moves massively fast and hard, yeah, and the other two won't. If the New Zealand dollar moves fast and hard in one direction, they will all do the same thing. But because you've got 2 pairs, yeah, if you get into all the Aussie dollars and you are saying I'm going long on everything against the yen, for example, which means you're shorting the yen, you might find that the US dollar collapses. Yeah, and that one makes profit. But the pound rallies, and that pound yen goes into drawdown. Your exposure on the yen doesn't mean that you need the yen to move. You need something against the yen also to move to help you out. So by exposing yourself to every single currency pair, you are always going to be in something that's moving, usually to bank some profit. But you will also always be in something that's going to go into drawdown a lot of the time as well. So that's why you have to reduce your risk. Yeah. So the normal risk parameters that I use are less than half of normal because I'm trading more than twice the amount of instruments I normally would. I would never normally be in more than 6 to 8 trades at a time, or 6 to 8 pairs at a time. As many trades as it takes, obviously. But does that make sense? Is that what you meant? Hopefully that answers the question, but I can't really give. This is why I've put all the time into producing all of this content. Yeah. You need to sit, you need to read, you need to absorb, you need to watch. It's going to take 3 hours of your life, but you will fully understand exactly why the EA works the way it works, why there's so many settings and what they do, because there isn't one right or wrong way to do anything in trading. If with position trading, you can be as aggressive or as conservative as you like, or anywhere in between. You can do drawdown control on the way, or you can do it manually yourself. You know, there isn't a right or wrong way to do it. You are controlled by this figure here and these individual figures here. This is all you need to look at. The EA is just going to do what you tell it to do, and it will scale you in and out of your positions as you want it to do automatically. But as you see in here, I am on top of every single position if it needs me on top of it. If it doesn't need me on top of it, I'm ignoring it, because all it does is just as soon as it gets to a big enough number there, it pops it over there, or I pop it over. That's why the EA is so malleable, but with that comes a lot of confusion. You can't have it both ways. I kind of class my EA as a professional trading tool, not one of. It's not, you know, it's not one of these. Here's a backtest result. Buy this. Go and sit on a beach. Doesn't exist. What mine does is allow you to trade the way that you want to trade. You want to use a stop? Fine, it does it. You don't want to? Fine, it does that. You want to space it that far? No problem. That far? No problem. You want to risk on a set limit, or, you know, it just does everything. You want pending orders? Yeah, no problem. It does it. It does everything. It's a Swiss Army knife. But obviously, you can cut your fingers on a Swiss Army knife. So happy to help, but it's very difficult to explain stuff, which is why I did the manual and was hoping that, you know, the hope is everybody can understand it in detail. The EU experiment was more to see how I would do the live market using it to get me in. I need to intervene. I think 5 max pairs is manageable. Yeah, I think you're right. I think you need to have diversification on it. If you're going to trade that Asian breakout range, you need an Aussie pair in there. You need a UK pair in there, like the euro or the pound. You need a US pair in there, the US or the CAD. You need the Aussie and the New Zealand and the yen. I would leave the Swissy out. Mind you, the Swissy moves so much. I would probably go either euros. I would probably go pound Swissy. I would use pound Swissy rather than euro, because the pound moves independently. The Swiss moves with the euro, and the Swiss moves more volatile than the euro does, because the euro US dollar is a more liquid market, therefore it's got less movement. The Swiss franc's less liquid, therefore it moves more. So Swiss franc, pound, either Aussie or New Zealand, yen, and US dollar, and pick 5 pairs with those crosses so that you're not over leveraging yourself, and just let the breakouts flow. I think that's the way to test that out. Make a note of that. Just looked, on average, lot size is 2.5 lots. I'm using 0.5%. A little risky. Seems the range is averaged around 10 pips. Since I've been using ADR-based stops, which you can do the same with the opening range breakout EA, you can mimic this by just using higher than the range. So at the moment, obviously all the set files have got 110% of ADR. Reason being, it's just so that if you get slipped, it puts your stop outside the range. With the version that I'm using here, uses ADR to do its calculations, and it's set to a wider stop. I find actually that getting hedged is more beneficial than getting stopped out, because if you're hedged and then the market goes, you get a winner. The winners are slightly less because your stop is wider, your lot size is lower, than for your reward is slightly less, but you get rewarded more often. You'll see what I mean. So the strike rate is higher. So what you might want to try, Brian, is using 130. What I would do is probably say, look, go with 120% of the range as a stop loss. Test between 120 to 150 and see what the results are. You will definitely get hedged on some of the trades, but the ones you don't get hedged on, a la this one today, yeah. So we just went short, bang. These ones pay for those. And if you're running 5 pairs and 3 of them go, you're going to make money. If you're running 5 pairs and 2 of them go, you're probably going to make money. If you're running 5 pairs and none of them go, it's going to hurt like hell. But as long as you've got a wide stop, some of them will. You're always going to hedge in your risk, aren't you? But again, FIFO is going to kill you. You can't hedge. So you need to run 2 accounts, one set to long only, one set to short only. That's what you'd need to do. I might test that. As of now, what the hell? Dog's going nuts. As of now, I'm 9.5% on the month. See how we end the month. Yeah, that's good. That's a brilliant return. 9.5%. You can't go wrong there, can you? Where did the dollar strength come from today? Can't see any dollar strength. This is yen weakness. That's CAD weakness. That's not doing anything. Pound US dollar has moved less than 1/4 of an ADR. Euro US dollar, less than 1/4 of an ADR. US dollar's not done anything today. Because I'm using to seeing the charts and make decisions and look what's the market. Language barrier. I don't understand what you're saying. In Asia, I used odd, euro, and CAD, even yen. Yeah, the Canadian dollar will also move in the Asian session because it's a commodity pair, and it moves with the commodity pairs, which is the Aussie dollar and New I was hoping to pull out of my Tesla position and start trading. Looks like it's hit the fan. Yeah. AZ, stop trading stocks. Right. I'm not going to bank anything else today. I don't think. Everything's banked. Excuse me, that I wanted to bank. I've closed out that CAD yen. Probably shouldn't have, but I have. Just because they're all working out and it's a lovely ADR stop reversal. US dollar Swiss, I can bank some. Euro US dollar, I can bank some. CAD Swiss, I can bank. You know, there's loads of stuff I can bank at the moment, but it's been a bit of a funny day today. So I think I'm probably going to hold this over the weekend. As much as I'm tempted to bank this 2% or so and have a 10% week, which would be lovely. I'm not going to bank it just to hit the numbers because I still think there's more movement on these potentially. So we'll see what happens. But I'm going to hold that over the weekend and see where we go. If we get an end of day sell-off and this position changes and all of a sudden I'm sitting in pluses here, I'm just going to bank some and then reset next week. You want to try, if you can, and get as flat as you can by non-farm payroll. Because it could go non-farm payroll, FOMC, because it could go absolutely anywhere on FOMC next week, as we know. So just quick recap of next week. It's a big one. So we've got Monday, we go straight in at 8:15 into PMIs. And the PMIs are all day. We've got 8:15, 8:30, 9 o'clock, 9:30, 2:45, all day PMIs. So the DAX session will be interrupted with it. The New York session will also be interrupted by PMI figures. Then we got a day off where we get the consumer confidence on Tuesday. Then we're straight into the Australian inflation figures on Wednesday morning. And then we've got FOMC Wednesday evening, which is the new rate announcement for the US dollar. And then straight after that, Thursday afternoon, we go into the euro refinancing rate. So the interest rates for the euro are announced. Then we've got the GDP and unemployment claims for the US dollar, followed by the ECB press conference in the afternoon before the market opens. So we're going to get all the information about what the forward guidance is on interest rates from Lagarde. So that's going to upset the euro. And then on Friday, after all this has happened, we go straight into the Bank of Japan's monetary policy statement. And if for any reason that US dollar has rallied against the yen, they're going to be cross. So they will be hawkish as hell and try to pump the yen to bring it back down again. And then we've got the CAD GDP and US dollar unemployment cost index, which is not a lot, but the PCE we've got. So next week is total chaos every single day. So first week of the school holidays in the UK as well. So it's summer trading. Historically tends to start when the schools break up. So volatility starts to drop. Everything starts to go a little bit liquid, which means one of two things: absolutely no movement, or we've got a big order to place. There's no liquidity, so we need to move a long way to find it. It's a volatile 6 weeks we're entering into. So all kicks off with FOMC next week. So flat as you can, basically, is the name of the game. But obviously, make profit along the way. So right, got to roll. Brian Pups has a veterinary appointment. Oh God. Good luck, Pups. Have a good weekend. David, is the 10% week from H1M5 only? Yep. This account doesn't trade ORB. This account is purely position trading. This account is ORB. And this account's done 14% this week. At the moment. Obviously, this week is not over. 5% down today, but if the S&P drops, we'll be fine. So yeah, no, this account is literally just position trading. H1M5 mean reversion. By next week will be crazy. Yeah. How much is your risk on your funding account? I don't position trade on the funding account. My risk is what I see fit, 0.5% to 1%. Depending on how it's going, it changes. if I'm expecting a load of volatility, I'll risk a little bit more. If I've had a bad week, I'll start pulling back. It all depends. Varies. But never more than 0.5% to 1% per entry. It's prop. On the funded accounts, it's prop. You are in the lap of the gods. If the market wants to make you money, it'll make you money. If it doesn't, it'll blow your account. So risk it. If you go in tiny risk and the market doesn't want you to make money, you'll be in tiny risk. You'll be sitting there for a month and you'll get absolutely nowhere. You're better off blowing the account, starting it again, and hoping that this week is the week that the market goes nuts, rather than sitting there trying to get an account grown. It doesn't happen that way, because at some point the market's going to kick you in the arse and that's going to be lost. So go in hard, 0.5%, 1% per entry. And on the days like this, the weeks like this, yeah, you draw your money out. Yeah. If you've done 5 evaluations and it costs you 2.5 grand, who gives a monkeys? You've made 14 grand so far this week. Yeah, it doesn't. That's how you do it. You play it along those sorts of lines. So your risk is as much as you can risk without panicking. Did you get any aggressive drawdown control on US dollar Swiss? Yes, I've got one on it at the moment. Oh no, I've taken it off, sorry. So this one here was an aggressive drawdown control position, which I took off there to do some drawdown control. So that was yesterday. So that 1.5 was the aggressive. So that was $500. And I used all of it to do drawdown control. Yeah, so I used all 500 of that to remove 0.3 off of the higher positions. So just to bring the average down by 1/4 of an ADR. But I haven't got any aggressive drawdown control positions on that now. No, that's just normal positioning. And it's in profit. I can close the whole lot out now on the US dollar Swiss. And bank that. But it'll be a losing trade because I've scaled out of it's about $500 in drawdown, the whole thing at the moment, because all of that was used. So that aggressive has cancelled itself out. So it's about $500 in drawdown, and it's sitting in $230 of profit. If I can get a push up into this propulsion gap, if we got an ADR hit, for example, today, by the end of the day, I'll close that, because that'll be sitting at something like $1,000 or $1,500 or something. So I'll put that 1.5% in the bank. Because I've also got a sell on it as well, hedged. But I think we'll probably push up more on that move before it comes down. So I'm holding it at the moment. But as you can see today, this looks a little bit like a flag break, but it's not going anywhere at the moment. And I'm worried. What I'm worried about is it just doing that until FOMC on Wednesday. And then FOMC on Wednesday, if the Fed talk the dollar down, we're stuffed. We're not stuffed, but obviously it's just going to make it more difficult to get out of, isn't it? So I'd just like to get some profit on it. But right now, if I wanted to, I could just shut the whole lot out and walk away and go, had enough of you. And that's the beauty of position trading. I can walk away from this and go, I like it. But those are the decisions you need to make. Those are your decisions. Your decisions aren't, am I right? Am I wrong? Is this the right strategy? I'm removing all of that stuff where it's like, should I be trading this? Should I be trading that time frame? Should I be using this strategy? Should I be a trend trader? Should I be a mean reversion trader? Just trade. Your decision is, shall I get out of this now in profit, or shall I wait for it to make more money? That's your decision. Your decision is now, when do I close stuff out? And that's why I'm always out too soon, because I always close stuff out too soon. Look at where I got out on that aggressive drawdown control position. If I'd have held that until the end of day yesterday, that would have been something like 4.5 to 5%, and this would be flat. But I didn't, because I saw a big down candle coming in at a double top. It scared me out. It's trading. You react to what you see. You trade what you see. Unfortunately, if I hadn't seen it, if I'd have been walking the dog right there, I would have made that much. But I wasn't. I was sitting there watching the charts. That's the difference between making money and not making money. Whether you're looking at it or not looking at it decides whether or not you get in or get out. We're human beings. We react to what we see, don't we? Why did US dollar yen go up 250 pips today? Gordy, you need to go and look at the news. It's obvious. You should know that. That question I get asked in Telegram. I always answer the same thing. If you don't know that, you shouldn't be trading. I'll give you a hint. Go and look at it. Go and read why it happened, why it's moved. It's all to do with the Bank of Japan. Right, I'll leave it there. Anything you need, let me know. I'll be back on Monday, 7:50 same time, 2:20 in the afternoon for the US session. We'll see how we get on with the DAX, the S&P this afternoon. That's my only hope of rescue today. So hopefully the markets just continue and they drop. But if not, whatever. You knew that. Then why did you ask the question? So I'll be back on Monday. Anything you need, let me know. I'll be in Telegram over the weekend if you need me. But otherwise, I will be back then. Have a good weekend and see you on Monday.